Welcome to the deep dive. We unpack the stories behind the numbers, the strategies behind success.
That's right.
And have you ever wondered how a major company navigates really unique, unexpected local challenges, but still manages to grow?
Yeah, it's a fascinating question.
Well, today we're taking a deep dive into MakeMyTrip Limited, that's MMYT on NASDAQ, India's, well, undisputed leader in travel services.
Absolutely.
Our mission is to unpack their fiscal 2026 first quarter results. That's the period ending June 30, 2025.
Precisely. And we've got the source material right here, their unaudited interim financial release, and, crucially, the earnings call transcript.
Okay.
So what we'll uncover isn't just, a list of numbers. It's really a story about agility. We'll see how MakeMyTrip made strategic moves to, well, not just survive, but actually thrive, despite some pretty big external headwinds.
Might headwinds is putting it mildly, as we'll see.
And what that tells us about the wider travel sector, too.
Okay, so let's frame this. How did MakeMyTrip, India's travel giant, manage to perform so well in a quarter hit by these unforeseen crises? Let's get into their Q1 FY26 results. Starting with the top-line numbers, which honestly are pretty strong given the context.
They really are. Total revenue hit $268.8 million.
Wow.
That's up 5.6%.
Okay.
But, and this is key, if you look at it in constant currency, stripping out the exchange rate effects to see the real underlying growth,
Yeah.
it's actually a 7.8% increase.
Yeah.
More robust.
That's a significant difference. And how did that flow down to profitability?
Even better, actually. Results from operating activities that jumped 44.9% to $40.4 million.
Wow, nearly 45%.
Yeah, and profit for the period, up 22.6% to $25.8 million.
Right.
Now, if we look at their preferred non-IFRS measures, which kind of smooth things out.
Right, the adjusted figures.
Exactly. Adjusted operating profit improved 21.0% to $47.3 million. And adjusted net profit was up 11.0% to $49.4 million. So solid bottom line improvement, too.
And gross bookings, the total value of stuff booked.
It's also healthy. Up 9.6% to $2.61 billion. Or 12.4% in constant currency.
Okay, these numbers are strong, definitely. But they become, well, almost exceptional when you hear about the challenges they face during this exact period.
Right. This is where the narrative really kicks in. The group CEO, Rajesh Magal, he said they had a great start in April 25. Demand was strong. But then things, quote, slowed down in May and June. And there were specific reasons. Very impactful events.
What were they?
Well, first, a terrorist attack near Pahalgam in Jammu and Kashmir, that was April 22nd, caused huge travel disruption, airport closures that lasted until a ceasefire on May 10th.
Right, that's a major tourist destination area.
Exactly. And then adding to that, there was a passenger plane crash in Ahmedabad in June.
Oh, wow. So a security incident and an aviation accident in the same quarter.
Yeah, a tough combination. It understandably led to, muted consumer sentiment, especially for leisure travel, and supply constraints, too, particularly for domestic flights and holiday packages.
You can see how that would hit hard. But clearly, based on the numbers, they weathered it. How?
It really seems to come down to their diversified business mix. They aren't just relying on one thing. They have ancillary services, other transport modes like buses and rail, their corporate travel business, international travel.
So strength in some areas could offset weakness in others.
That seems to be the story. It allowed them to navigate these, well, hopefully short-term adversities. It really highlights the benefit of not having all your eggs in one basket.
And management sees these impacts as short-term.
Very much so. They were quite clear on the earnings call. They emphasized their unwavering confidence in the long-term growth of India's travel sector.
What's driving that confidence?
A few fundamental things. Rising disposable incomes, massive infrastructure upgrades happening across India, and just a basic shift in how people travel, more focus on experiences, taking multiple shorter breaks.
Okay, so they're looking past the immediate issues.
Definitely. Building for the long haul, not just reacting quarter to quarter.
That makes sense. So their optimism is clear, but how did it actually play out in the different business segments this quarter? With those headwinds blowing, where did the growth actually come from? Let's start with air ticketing.
Okay, air ticketing. Revenue grew 4.5%, reaching $60.1 million, or 6.9% in constant currency.
Solid.
But the adjusted margin grew even faster, up 8.9% or 11.5% constant currency to $97.1 million.
Okay, so margins improving faster than revenue. What drove that?
Primarily a 5.0% increase in the actual number of flight segments booked, more people flying through them.
And what about market share? Domestically, did they lose ground given the issues?
Surprisingly, no. They actually maintained, even slightly increased their domestic air market share, went from 30.6% to 30.8%.
That's impressive resilience in a tough domestic market.
It really is. But what's even more striking is international air. Revenue there grew over 27% year over year.
27%.
Yep. And volumes, the number of bookings, up 21% year over year. That's way ahead of the overall market growth, which is around 7%.
So international is a huge bright spot.
Absolutely.
Yeah.
International air ticketing revenue is now at an all-time high for them, 42% of their total air ticketing revenue. That shift towards international seems to be really paying dividends.
And were they doing anything specific on the customer experience side for air travel?
Yeah, a few things. They launched a new zero cancellation product for domestic flights, which is, pretty useful for travelers.
Yeah.
Streamlined booking for airport transfers.
Yeah.
And expanded their lounge offerings significantly, now covering 131 international airports.
Okay, showing they're focused on the whole journey, not just the ticket.
Exactly.
All right, let's shift to hotels and packages. Now, this is where you mentioned things got a bit paradoxical.
Yes, exactly. So headline revenue for hotels and packages actually decreased by 3.5% to $141.6 million.
Okay, that makes sense given the hit to domestic leisure packages from those incidents.
Right. That seems to be the main driver there. But here's the twist. The adjusted margin for this segment increased, and not by a small amount, up 13.6% or 16.3% in constant currency to $121.9 million.
Wait, revenue down, margin up? How does that work?
It was driven by a strong increase in gross bookings, up 12.5%. And specifically, hotel room nights booked were up 17.0%.
Ah, so people book more hotel nights even if the overall package revenue dipped.
Precisely. And the key insight seems to be that strength in other areas, particularly corporate travel and international outbound travel, helped cushion the blow from that weak domestic leisure package segment.
So, again, diversification pays off.
It really does. It shows the power of that balanced portfolio they've built.
And they're still expanding supply in this area.
Aggressively. They now list over 91,000 accommodation options in India across more than 2,000 cities. And internationally, they've directly contracted over 2,000 hotels themselves in key cities, plus that new partnership with Premier Inn in the UK.
So building out both breadth in India and depth internationally.
Seems like it. And they're layering tech on top, using generative AI for natural language search, find me a hotel near X with Y, and context-aware recommendations using a knowledge graph.
Okay, making search smarter.
Yeah, and getting very specific. They highlighted providing dining info for thousands of properties, focusing on things like vegetarian options in pilgrimage cities or which hotels are close to wildlife parks. Real hyper-local stuff.
That level of detail sounds like a real differentiator. What about packages and homestays specifically?
International outbound packages are doing well. They mentioned Japan, Africa, Jordan, Tashkent specifically is scaling nicely, and homestays. Huge growth. Supply in pilgrimage cities like Varanasi and Ayodhya saw a 103% jump in new rooms.
Wow, doubling supply there.
Yeah. And even in big business cities, Mumbai, Delhi, Bangalore, homestay supply grew 46%. So they're tapping into that demand across different travel types.
And catering to different accommodation preferences, too.
Definitely. They noted international travelers are increasingly opting for alternative places like hostels and apartments. And that international mix overall in hotels and packages revenue reached over 25%.
Okay, strong international showing there, too. Let's switch to bus ticketing. How did that segment perform? Bus
ticketing was a real powerhouse this quarter. Very robust growth. Revenue surged 32.6% to $38.8 million, 35.0% in constant currency.
35% growth? That's huge.
It is. And adjusted margin kept pace up 31.6%, or 34.1% constant currency, hitting $42.6 million.
What's driving that kind of growth?
Simply put, a 32.6% increase in the number of bus tickets sold year over year. Okay.
Any particular trends within India?
Yeah, interesting stuff. Growth was broad-based, but the North and East regions actually outpaced the traditionally stronger markets, and they saw significantly higher growth coming from pilgrimage routes and Tier 3 destinations.
So deepening penetration beyond the major cities.
Exactly, reaching further into India.
Yeah.
And they're adding supply rapidly. Private operator inventory crossed 44,000 daily schedules, including more premium buses. And state-run buses, the RTCs, are now over 40,000 daily schedules with new additions.
They seem to have a commanding position in India. What about internationally?
They mentioned being the market leader in Malaysia now. and they're adding adjacent products there, like ferries and activities. Plus, they use the phrase market making in other countries.
Market making sounds like they're actively building the bus travel market elsewhere.
That's the implication, yeah. Strategic expansion beyond India.
Okay, and finally, the others segment. What's in there and how did it do?
So others is kind of a catch-all. It includes things like rail tickets, intercity cabs, travel insurance, foreign exchange, marketing alliances, other ancillary stuff.
Got it. Performance.
Also very strong. Revenue up 35.4% to $28.3 million. That's 38.7% in constant currency. And adjusted margin grew even faster, up 44.1% or 47.4% constant currency to $21.5 million.
Those sound like high-margin services.
They generally are. Sticky services, too. And they highlighted some specific improvements here. An industry-first train seat availability predictor using machine learning.
Oh, that's useful.
Yeah, definitely. And for airport cabs, they introduced flight track cabs that automatically adjust pickup times based on real-time flight data. Said it really improved reliability and customer satisfaction scores.
Smart use of data.
And their corporate travel side saw good growth, too. MyBiz has over 66,500 corporate customers now, and Quest Travel serves 515 large corporates. So B2B is clearly expanding.
Okay, that covers the segments. Let's pivot to the overall financial health and some big strategic moves they made. How's the cost side looking?
Well, costs were managed, but did increase in places. Personnel expenses up 5.3%, mainly wage increases, though offset a bit by lower share-based compensation costs.
Okay.
Marketing and sales promotion costs rose 9.6%. That reflects variable costs tied to bookings, but also deliberate brand-building efforts.
Yeah.
Customer inducement costs, basically discounts recorded as a revenue reduction, were also up significantly.
Right, common in this space. But how efficient are they overall?
Their overall customer acquisition cost was pretty steady at 5.1% of gross booking value, which is quite efficient.
That seems reasonable. Any other cost pressures?
Other operating expenses increased 12.6%, mainly things like distribution costs, website hosting, outsourcing stuff that scales with volume, and net finance shifted from income to a cost, mainly due to higher interest expense and some foreign exchange losses.
Okay, but the key profitability metric, adjusted operating margin.
That actually improved. It reached 1.8% of gross booking value, up from 1.64% the previous year.
Right.
So that shows operating leverage. They're getting more profitable per dollar booked as they grow.
That's a positive sign. Now, there was some major news on the capital structure front, right? A big share repurchase.
Huge news. Yeah, on July 2nd, right after the quarter ended, they bought back a massive block of shares, over 34 million Class B shares from Trip.com Group.
Trip.com, the Chinese OTA giant. How did they fund that?
It was a big transaction, funded by about $3 billion from issuing new ordinary shares and roughly $1.4 billion raised through convertible senior notes.
Okay, so a significant restructuring. What's the impact?
Well, the total number of shares outstanding is down significantly, from about 111 million to around 95 million. And crucially, Trip.com's voting power is now down to approximately 16.9%.
So it simplifies things and reduces Trip.com's influence.
Exactly. And alongside this, some governance changes. A new member on the audit committee, and they established a brand new nominations committee chaired by Deep Kalra, the founder, signals a focus on strengthening governance.
Makes sense. And looking forward, what's their capital position now? What are they planning to do with their cash?
They're sitting on a substantial cash pile, about $804 million in cash and equivalents. Gives them a lot of flexibility.
Right. And they have an existing share buyback program.
They do. Authorized until March 2026 for up to $136 million total, capped at $60 million per year. They still have about $114 million left under that authority.
Are they actively using it?
Management described it as an opportunistic program right now, buying back shares if the price looks attractive. But they did say they're open to considering a more steady program in future years.
Interesting. So maybe more consistent returns to shareholders down the line.
Potentially, yeah. Seems like an option they're keeping open.
And what about the long-rumored India IPO? Any update there?
They reiterated their stance. Listing in India remains a midterm aspiration. It's more linked to potential future fundraising needs, rather than something they feel they need to do right now, especially with their current cash reserves.
Okay, so not imminent, but still on the horizon.
Seems to be the message. A strategic option for the future.
All right, let's try and wrap this up. If we zoom out, what are the key takeaways from MakeMyTrip's Q1?
I think the headline is really their ability to deliver strong financial results and show remarkable operational agility despite facing those, very significant unforeseen external shocks.
Right, the performance was strong even before you consider the headwinds.
Exactly. And their diversified business model across air, hotels, packages, bus, international, corporate, combined with strategic investments in things like generative AI and expanding their supply, that really allowed them to pivot. They shifted focus where needed and kept the growth engine running.
It wasn't just about surviving the storm, it was about navigating it effectively.
Precisely.
So, for you listening, understanding this deep dive hopefully gives you some unique insights into how a major travel platform adapts. It's about how they use technology, deep local understanding, and diversification to build resilience and fuel growth, even when things get tough.
Yeah, it's a real case study in strategic execution in a very dynamic market like India.
Okay, here's a final thought for you to chew on, building on all this. In a world where, global giants often try to dominate everywhere, Make My Trip's continued success in India feels different. It's built on hyper-localization, really strategic supply expansion tailored to India, and specific tech innovations like that Gen AI content we talked about.
Hmm.
It suggests that maybe winning in these high-growth, unique markets depends less on a one-size-fits-all global playbook and more on deeply understanding and catering to local consumer behavior. So what does that mean for the future? Will we see more specialized local champions thrive against the generalist global behemoths in emerging economies?
That's a great question to ponder. The balance between global scale and local nuance.
We'll leave you with that thought. Thanks for joining us on the Deep Dive.